SpaceX went public, but the real change is not the stock, it is the clock. For 24 years, SpaceX answered to one clock. Not a quarterly clock, not a shareholder clock, Elon Musk's clock. That is how the company learned to build, move fast, break hardware, fly again, change the plan while the metal is still warm. That clock helped create Starship. It let a rocket explode without becoming the end of the program. It let test flights become part of the design process. It let failure look less like failure and more like data. Most companies could not survive that rhythm. SpaceX was built around it. Then SpaceX entered a system that measures time differently. On June 12, 2026, SpaceX began trading publicly on Nasdaq under the ticker SPCX. The IPO had priced the night before at $135 per share. It raised $75 billion by selling roughly 555 million shares. The stock rose sharply on its first day. Now that sounds like a headline. It is not the pressure. The IPO implied a valuation of about $1.77 trillion. That number does not make Starship easier, it makes the future louder. A private company can ask insiders to wait through another test cycle. A public company can still ask for patience, but patience now has a price on a screen. Each quarter becomes a checkpoint. Each milestone becomes a signal. Starship does not have to fail for pressure to build. It only has to take longer than the second clock expected. The pressure is that Starship now lives inside a public company. Public companies have quarters, filings, investor expectations, a share price that moves when confidence moves. Starship was built in a culture where the next test mattered more than the next quarter. Now, both matter. SpaceX operated on Elon Musk's timeline for 24 years. On June 12, 2026, a second timeline started, and it does not care about engineering problems. The second clock is quiet at first. It does not stop a launch. It does not redesign a booster. It does not walk into Starbase and tell engineers how to weld steel. It waits. Then the filing becomes the pressure point. In the S1, SpaceX gives Starship a public milestone. We expect Starship to commence payload delivery to orbit in the second half of 2026. That is not a tweet, it is not a live stream promise. It sits in a registration statement filed for public investors to read. That changes the shape of the program. A delay was once mainly an engineering problem. Now it is also a public company explanation. A failed test was once part of the rhythm. Now it lands in a market that is already priced in a future where Starship starts carrying payloads. The old SpaceX could absorb uncertainty because the mission clock was internal. The new SpaceX still has that internal clock, but beside it is another one, counting toward quarters, guidance, filings, and valuation. The filing reads like an X-ray. Starlink is the engine carrying much of the business. In 2025, it generated $11.4 billion in revenue and $4.4 billion in operating profit. Starship is the machine the future keeps pointing toward, but it is still expensive. SpaceX spent $3.0 billion on Starship research and development in 2025, plus $930 million in the first quarter of 2026. That is the tension. Starlink may be carrying the business. Starship is still consuming it. Every quarter Starship delays is another quarter the company has to explain why the future is still coming. The company-wide losses make the picture noisier, but the source matters. SpaceX reported a $4.28 billion net loss in the first quarter of 2026, driven mostly by the AI segment, not Starship. xAI alone lost about $2.47 billion in that quarter. Starship is not the whole lost story. Its pressure is different. Starship consumes capital while the company's largest future stories wait for it to become routine. That pressure is clearest inside Starlink itself. SpaceX says a single Starship launch can deploy up to 60 V3 Starlink satellites, about a 20-fold capacity jump over Falcon 9. Current rockets cannot carry V3 at all. That means the next version of SpaceX's most important business is not simply waiting for more launches. It is waiting for a different rocket. This is where the clocks start tightening around the same vehicle. The S1 says Starship is expected to begin payload delivery to orbit in the second half of 2026. That is the first lock. Next generation Starlink is another. The bigger and more capable the network becomes, the more valuable Starship's lift capacity becomes. Smaller rockets can keep the system alive. Starship is what turns the next version into something larger. Then comes NASA. Artemis does not just want Starship to fly. NASA's lunar landing architecture depends on a version of Starship becoming a human landing system. That places Starship on a government clock too. SpaceX has its engineering clock. Public investors have a market clock. NASA has a mission clock. All three point at the same rocket. The architecture becomes even tighter with orbital refueling. Starship does not become the vehicle in the animations until that system works. Tankers have to launch. Propellant has to transfer. The vehicle has to survive the sequence. Without refueling, the Mars story stays distant, but the lunar chain stays incomplete, and the heavy lift promise remains only partly unlocked. Every dependency adds weight. Next generation Starlink needs capacity. Artemis needs the lander. Orbital refueling needs repeated Starship operations. The AI and orbital infrastructure story needs cheap, frequent, heavy lift. Mars needs the full system to scale beyond Earth orbit. Starship is not just NASA's lander, it is the rocket SpaceX needs for next-generation Starlink orbital refueling, AI infrastructure, and Mars. Every one of those programs is now running on the same clock. Musk controls the votes. He can ignore the pressure, but the second clock does not need his permission to run. A dual-class structure can protect control. It cannot stop quarterly reporting. It cannot stop investors from comparing progress with the filing. It cannot make public expectations move at engineering speed. A test program wants tolerance. A market wants signals. A rocket wants time. A public valuation wants proof. That is the new system around Starship. Not collapse, not doom, pressure. The same machine that carried SpaceX's long-term story now has to carry the public market story too. If you want to understand what space missions actually depend on, not just the launches, but the systems behind them, subscribe to Spacewatch. The question is not whether SpaceX succeeds or fails. The question is what success now requires. Before the IPO, Starship could be late and still belong to one internal story. Build the system, test the system, keep moving. After the IPO, lateness has more surfaces to hit. It hits Starlink expansion, it hits Artemis assumptions, it hits AI infrastructure narratives, it hits Mars timelines, it hits the public company that sold investors one of the largest debut stories ever. That does not mean Starship has to move perfectly. It means mistakes now echo differently. A scrub is still normal. A test failure can still teach something. A redesign can still be the right decision. But each delay now lands inside a structure that measures progress every 3 months. Both clocks can be rational. They still run at different speeds. The engineering clock can say the program is learning. The market clock can ask why the payloads are not flying yet. SpaceX built Starship on one clock. It is now being asked to deliver on two. That has never been tested. Not at this scale. Not with this many systems depending on the result. Something that used to be simple has quietly become more complicated. A system under new pressure, and for the first time, Starship is being asked to move at 2 different speeds.